Welcome back. I'm Marlon Bowling, your tour guide to the ag commodities. And as we continue on and keep a close eye on what's going on here in this ag trade today, I want to welcome aboard Mr. Brian Hoops. Now, Brian has multiple offices all around the Western Corn Belt and across the plains. And Brian has a company called Midwest Market Solutions. He's based in Springfield, Missouri. And it's always a pleasure to get to talk to you, Brian. Interesting how, yesterday morning you joined me first thing in the morning, and we were talking about the wedge formations on the charts. And we were talking about the wedge formations on the corn chart, also on the soybean chart. It was much more, let's say, pronounced on the soybean chart. Now, on the corn, we have a December corn chart up on the screen for our viewers at home and those watching on RFD TV now, or RFD now. But anyway, it is showing, you can kind of discern that kind of a narrowing triangle there in that December corn. And we were talking about it yesterday, that it was getting to be decision time here as it's coming to a point. Now, you look at the November soybean chart, and it had that triangle going there, but it looks like maybe today with, if you look at the screen, it says it's currently down 40.25 cents on November at 13.125 per bushel. Has that blown out that triangle now, that wedge-shaped formation, Brian?
Yeah, it has, Marlon. I think that's what's given us so much selling pressure here is a lot of technicals coming into the marketplace. We combine that with a little bit of negative news yesterday from the census crush report that came out yesterday afternoon, showing a big slowdown in our crush margins and our crushing pace. So it was a little negative to bean oil. And that market is kind of leading the charge lower here this morning from a fundamental standpoint. Crop ratings improved in the soy belt by 2%. That caught the trade off guard. And that was kind of enough to set us lower overnight. Yesterday we bounced off of that technical support and rallied. But we gave back all of those gains today and then some as we broke through that technical support, that wedge pattern, and set off a lot of sell stops. And so somewhere I think we should start to find some good fundamental value here, good support, as it still remains fairly dry through most of the Midwest going into the month of August. This is really the key growing period for soybeans. And, we do need to have some rain. I think, you get in this November contract around 1309, 1308 should be a real good supportive area, and the market likely to catch a bid at that price level.
So I'm hearing this morning that, yes, it's dry this week in the northwestern half of the Corn Belt, but maybe they're bringing some moisture back in on the extended forecast now if you go a week or two out. Is that correct?
That's what we're hearing too, and so maybe that's part of the reason the sell-off. I know a lot of producers who were expecting to receive some good rains last weekend did not receive those. It was in the forecast, and it was kind of hit or miss as far as some of the showers went. So it was a disappointment, I thought, and the market did not react to it once again. And so, there's an old saying that when a market fails to react to bullish news, it's a bad sign, and that's what we're seeing. I think, in the last couple of days, at least in the soy complex, is some bad news is weighing on the market. Good news is not supporting things, and that's why we're seeing this big sell-off. But hopefully we're closing in on this $13 mark, between $13, $13.09. We will find a bid and find good fundamental support for the soy complex.
Well, one thing I hear a lot of folks talking about is, demand would cure a lot of ills, and we just haven't had much in the way of demand here lately. And it's almost like being poked, like, we're going to make you suffer for a little while until we finally come back and buy. It's getting kind of late in the year already. Looking at the corn market right now, the soybeans we just saw were down 40 cents on November. We have December corn down 10.25 at 5.49. So all kinds of pressure here. In the Chicago wheat market, you currently have the September down 10.75 at 7.1875, almost on the low of the day. Kansas City, September down 6.75 at 6.9675. That's a penny and a half from its low of the day. And Minneapolis spring wheat has September turning lower by 14.75 cents now at 9.08. That's only 2 ticks from its low of the day. All kinds of pressure everywhere you look. And December cotton, 1 lonely tick higher at 89.64 cents per pound, the only plus sign I can find. We'll come back in a moment. We'll talk with Brian Hoops about our livestock trade when we come back. We're back with Brian Hoops of Midwest Market Solutions. Now, he is based in Springfield, Missouri, and I want to talk with Brian about this livestock trade as it stands right now. In fact, let's go ahead and go right to the live cattle quotes. We are higher by $1.05 on October, and we're trading at 128.32 right now. That would put us within 30 cents of our high of the day. Brian, is October where you see most of the trading volume in the live cattle trade?
Yeah, exactly right, Marlon. The Goldman roll ended about a week ago or more, where traders were moving out of their long August positions into a long October. And so most of the volume is in that contract now, and that's been the upside leader so far today. There seems like a string of cattle that seem to trade every Monday on a regional basis in Nebraska. They were at 125 yesterday. I think that's a supportive number for this week. We came in to the week expecting to see steady to lower type cash trade, but the futures market here is acting like we're going to see a little bit stronger trade this week. Cutout values have certainly been a supportive feature, so I wouldn't be surprised at all to see some strength here in this cash market as we go through the rest of the week.
Well, let's take a look then at the feeder cattle market, and there are those beef cutouts that you were just talking about. Choice were up over $2.50 on the afternoon update yesterday. Select's up over $4. We'll get a new update in a little over a half an hour from right now. On the feeder cattle trade, with the turnaround to the downside in the corn, feeders getting some support today, and September now trading 75 cents higher at 162.72. October up 70 cents. And lean hogs found some strength, led by the nearby contracts, but they're fading a bit here, Brian. October 62 higher at 90.10, but it's off our earlier high of the day, and we are off of that now by about 60 cents. So keep that in mind. It's actually getting closer now to our low of the day. We're back within about 40 cents of that, or 35 cents. So we'll have to keep an eye on that. The deferreds actually have turned lower in the far out contracts on lean hogs. Thanks, Brian, for the time. Appreciate it. Brian Hoops of Midwest Market Solutions. Janet, back to you.